Hi traders, and welcome to the technical analysis market wrap on Friday the 16th of September. So I've seen some really big moves in the market this week. We obviously had some very poor news that really affected the indices and some of the currency pairs. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So I'll start out here with the Aussie USD, as we always do. And as you can see, we've broken down past the 67 cent mark, which, look, was our initial target for the first move. It came up, basically tested the 50 moving average and came back and smashed it down again. That was really, a reactive move, even though it did bounce off this level. It probably wasn't going to be a great sustained one past. It really needed to break past these moving averages for us to take that move seriously, really. I think I mentioned that last week. When you break past moving averages and actually close above it, you are actually going to get above a lot of the area here that is proving to be a very difficult resistance zone because it was support previously. It obviously failed to do that, and once it did start to sell off, it's way back down here and now trying to push down lower. The candle has actually closed, as you can see, and the new candle has formed just below that 67 cent mark. Now, look, I'm slightly concerned on the short past this level. I don't think it provides. I think the opportunities to go short have already been there, and we've already done it, right? So we've already had all of the fun here with the Aussie. You've got to go a very, very long way to really find the next level of support for it. Like we'd have to go. Well, what I'll do, I'll go to a weekly first. And as you can see, we're at a level that hasn't really been, we haven't been this low for nearly 2 years. Now, the next real level of where we need to potentially go, if we're going to go looking for the next support, is around that sort of 64 mark, and it seems like a long way away for me. Yeah, can it do it? Absolutely it can. And look, it is in a long-term downtrend, there's no question about that, but it needs to be probably a reasonable close below 67 cents, and I wouldn't be aiming for just a hard and fast level of, say, 64. I would be treating this one as a scalp. When they do break a very key level and there's no real obvious support for it, and as you can see, there's no real obvious support here for quite a long way, even though we did have that smash down. There's no real significant level that you can say this is really solid. We can go to a monthly, but then we're starting to go a long way, and again, look, you can see here, apart from that really, really big sell-off, you can see that the support where we're at now is extraordinarily strong. I mean, the monthly really highlights it. You can see all the way through 2019. It was effectively there, and it held up for the best part of half a year before it actually went down and then came up very, very quickly, right? So this is an extraordinarily strong level of support. Now, when you see that, it's very difficult to try and break that support and try and go short with a really long-term plan. So I prefer to go for small scalps, and in that, I always go for the round numbers. So say from a break of 67 cents, the first level you'd be aiming for is basically 50 points, 50 pips down, and aim for those 50 pips. That's all I'd be doing, because that way, if you do get the short and sharp reversal, you're not going to feel too much pain, but you're also getting a chance to actually get some good trades in. So I think it's very important that you get those trades in, lock them in, lock the profit in, and then look at it and revisit it again if there is another opportunity in the future. And, if it means that you trade it all the way to 64 cents, but you take 7 or 8 trades out of it, well, so be it. So go to the smaller time frames, look for the pullbacks, and that's how I would be trading that one on the way down. On the way up, another scenario, of course, that it can reverse and continue and find that support from this level. Then you're looking for a series of higher highs and higher lows. On a big break like this, I wouldn't be taking anything short of a 4-hour. So a 4-hour time frame change of trend. So a series of higher highs, higher lows on a 4-hour chart, and then you'd be looking for taking those longs again back to the 68.50 in the first instance, and then up to the 69.50 and 70 cent mark. So but it needs to actually reverse from this level. So a series of higher highs and higher lows in a 4-hour. It's not going to look like anything like that at the moment. And then we can look for potential longing opportunities. That's the 2 ways I would play the Aussie. But it's been really good to us, played the game perfectly, and hit our support again. All right, we'll move over to the US dollar CAD. This one is trying to it's definitely broken and closed at a new high. As you can see here, previously it tried and attempted the new high, but actually failed to close there. And then we had this break up here and a bit of a pullback to the 50 moving average and that bit of a roll reversal zone. But now it's really pushing forward, and it has actually closed above all of the noise and above the 132.20. Again, though, this is one of those ones where you've got to go out a very, very long way. Like a very long way to appreciate. This is a monthly chart now, so you're going out years to really see where the next resistance is, and it's way back here, as you can see. And it wasn't here around the same time. As you can see, September in 2020 it was at this level, but even though it was actually on a decline from from the highs there of 145. It's looking strong. I mean, you look at it on a monthly chart and you see a series of high highs and higher lows. It looks like a big strong pattern, and we are about to get a crossover on the moving averages, which on a monthly chart is a really, really big trade. It looks strong. Dollar still looks strong, but it is at a very strong point of resistance as well. Okay, so you can see here exactly where price is now. There was a lot of noise here, a lot of resistance at this level. So similar to the Aussie, I would be treating this with care and just looking for scalping opportunities on the way up, and then look for pullbacks to the 20 moving average. Just trade the scalps. When they break key zones like this, I'm not a big fan of going for big long-term moves. Okay, it's just really scalping opportunities, 20 to 50 pips, and treat it like that. And I think it gets you in and out. And I think that's the important thing. Like, it gets you actually in and out of a trade. You can close it off and then look for the next opportunity without stressing that it's going to reverse and head back down really low or anything crazy like that. So that's how we look at the CAD. Failing that, of course, series of lower highs and lower lows in a 4 hour. And then we start aiming for that 130.80 in the first instance. 130.20, sorry. This blue line here. And if we get a break below that, then we start targeting the lower levels. But it doesn't look like that's the optimal trade at the moment. I think the longs are the better trades here. All right, we'll go over to the US dollar yen. This one's sort of flatlined a little bit this week. It hasn't really seen the big strength that we've seen in the CAD and the shorting of the Aussie, but it is still holding firm. Like, no question about that. We're still at a very good level, and I think it is finding the buyer and seller dynamics are playing out here, where they are basically leveling out. We are finding a little bit of consolidation. Generally, what we're looking for is it's a pretty easy trade in the sense that what it does is easy to trade. If we get a daily close below the 41.80, we start to short to the 20 moving average and to the next roll reversal zone, which was support through here and resistance through there, sorry. That will be support and the 50 moving average coinciding with it. Or we get a break above 145, a daily close below above 145, and we look for the next move up, which technically going to be probably the 146 or 146.50. So pretty easy trading, but I think it's one of those ones where you draw your lines up. You effectively, let's draw them and get them ready for next week so we know what we're talking about. Oops. Let me bring that up for you. Okay, and we'll do the same on the top end. Really easy. Okay, a daily close above the red line, and we look for 20 to 50 move scalps on the way up, and a daily close below, and we're looking for the shorts down to this level here. If you want to go to the smaller time frames and you go to, say, 15 minute, and you want to scalp it, you just need to obviously zoom it out. That's you're right in the middle of the channel. That's your line. Series of lower highs and lower lows in either direction, and you can just aim for those points to be your take profit target. So pretty straightforward trading on the yen. I think it's been pretty good. Okay, over the dollar index. So dollar index is again, look, it's had an interesting sort of week. We saw a bit of a rally in the S&P earlier in the week, and you could see that it pulled back in sync really, but the last 2 days have been pretty strong. 2 days ago it was very strong, and you can see we've got a little bit of flat lining happening here, but we are above that roll reversal zone again, and trading above the 20 moving average again, which is obviously very important. So, I mean, this all correlates to the euro, so we'll go straight into the euro. The euro is the one, again, it traded up, tested that level, rejected off it perfectly. I mean, the euro has just been a yo-yo on the technical analysis front. It's been fantastic. So hopefully you've been able to trade and been following what we're talking about on Fridays, because this has just been a bonanza of opportunity. And as you can see, straight up to that level, the 101.20, sold off at 2 big rejection candles is what you'd expect. Then a big sell-off down to below the 20 moving average. What it does from here, look, it's still trying to hang tough at this level. It is a very strong support level. There's no question about that. A close below the 99 area, and we're going to start targeting those 50 pip moves. Again, we're not going to go for big moves. We're just going to scalp, just like we're doing with the Aussie on the short if it does break lower, because that's a more sensible trade. Okay, so that's the way you'd want to play that one. And of course, a series of higher highs and higher lows on a 4 hour, and then we start aiming for the 101 again. So pretty good trading and pretty good scalping actually in those zones as well, but no big long-term moves are present until we actually get a break above the 101. If we get a daily break above the 101 and above all of this noise, then we start targeting the 102.50 and 103 again. So still a fair bit of work to do for that, but we can trade it both ways. There are definitely 2 opportunities to trade this one, and you can scalp it in the meantime in between the 2 bands. So pretty good trading. Okay, S&P 500, the last one we'll have a look at today. This one, closed below the 3,900, which is basically what was required for the short to really enact. We know we're at a weak time of year. We know we've had bad news. We know all of that. But when it comes down to it, technicals are what we're playing here. And this looks weak now, and like I said, a close below the 3,900 was the key pointer. It only just did it, only just. So realistically, how the market plays out tonight in the US is going to be very, very interesting. But my feel is that if we do maintain a close below this level for the week, so if the weekly candle closes below the 3,900, I think next week is going to be probably a little bit of a continuation of the sell. And I think the 3750 and 3780 areas here that you can see, this zone right through here where all these wicks are, that is probably going to be the target. And you think that it's almost a foregone conclusion that if we do get that weakness and it closes below there, it's going to gravitate to that level. A lot of people have still been calling 3,500. I'm not, totally convinced it's going to be that weak, but once a bit of a sell-off starts to happen, anything can actually continue. So, but in the first instance, I would be looking for that move down to about 37.50. But I think it's important, though, that the weekly closes here. I mean, if we get a green candle tonight and the weekend closes above 3,900, again, all this is just noise, really. And then we start looking for probably longing opportunities to the middle of the channel again, maybe to 4,000 or 4,050 early in the week. So that's how we play this one. Look for the weekly candle. Let's just concentrate on the weekly candle. If the weekly candle's below 3,900, we start to look for shorts next week. And if it's above the 3,900, I think we start to target. Wait for a series of higher highs and higher lows on a 1 hour or a 4 hour for this one. Aim for the middle of the channel around the 40.20 or the 37.50, depending on which way the candle closes. So I hope you've had a really good week's trading. I think it's had some really, really good trading opportunities. Technicals have been fantastic. Hopefully you're able to take advantage of some of those. Have a great weekend, and I look forward to seeing you all next week.